Hello and welcome. You're watching News 9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. With me in the studio, my colleague Suyash Maheshwari as usual.
Shweta.
Suyash, hi, good afternoon. Markets ending in deep reds this afternoon. Not a very good Friday.
Not a very good Friday, not a very good end to the week, and the week overall was very exhausting. If you remember, we started off with good numbers, scaling back the 19,800, but we have seen weakness persist in the last couple of sessions. Now, Nifty, the last tick for Nifty came in at around 19,542 levels. 19,542 was the level it opened at. So the opening and the close for Nifty is same. Nifty is down at close, was down about 0.42%. It has wiped off, around 82 points in today's trade. The index, Shweta, faced resistance near the 19,600 mark as it made an intraday high of 19,593, and it touched an intraday low of 19,518. So I mean, as we were discussing in the morning, that 500 to 19,500 to 19,600 range remains very crucial for the index, and it is hovering around that levels. Now if it breaks below that part, that 19,500 sort of levels, we can perhaps see some more bit of correction going forward. Okay. Now talking about Sensex was also down around 230 points in today's trade. Now Sensex ended just shy of the 65,400 sort of levels. The broader market, Shweta, saw some deep correction. As you can see on your screen, Nifty mid-cap 100 at close was down 1.13%. It closed below the 40,000 levels. Whereas the small cap 100 index closed about 0.8% lower, below the 13,000 mark. Volatility also spiked by about 1%. India VIX settled at 10.77 levels, up 1.14% in today's trade. Now among sectors, Shweta, let's first talk about Nifty Bank, because Nifty Bank has been a major laggard for the markets in general. I mean, between the two, because banking stocks have a weightage of about 40% in the entire Nifty pack, and a drawdown in Nifty Bank and banking stocks in general weighs on Nifty. So I think it's an important discussion to have around that mark. Now Nifty Bank, Nifty Bank actually reclaimed a lot of the losses that we were seeing early in the morning to end the index ended on a flattish note. Now index fell to a low of 43,567. Now this is August low, or this was the level is at August's low, where we also saw 43,545.50 sort of levels. So I think that will be a crucial level to track going forward. Perhaps if we see a dip below that, maybe the index could correct from there on, but the momentum won't really turn until we significantly close above that 43,800 level, which was seen as a crucial support. Now that has now turned into a resistance levels. In fact, if we see today, Indian the benchmark index, Nifty Bank, jumped above that trend line of 0% level mark, and for a very brief period it scaled at 43,800 levels, but thereafter we saw a sharp correction, and throughout the session it was trading below that 43,800 mark. Now among other sectors, most of the sectors barring Nifty Private Bank ended in red. We saw some good bit of a rally coming in some of the private banking names. Kotak Mahindra, ICICI Bank are due to come out with their results tomorrow on the Saturday, so perhaps we are seeing some buying action ahead of those results. HDFC Bank was also up about
so some correction there in the HDFC Bank.
HDFC Bank is actually up, so that supported the private banking pack, because of the high weightage that it holds. I think it contributes about 30 to 40% weightage in the Nifty Private Bank. So the HDFC Bank stock was up about 0.5%. So I think that provided some sort of support,
relief and
to
support
both
to
private banks and Nifty banks as well.
All right. FMCG sector, surprisingly down by about 1.29%. It's been a mixed bag as far as results is concerned.
I mean, I think this is pretty
much
what the street was expecting. It is
commentary and the outlook of FMCG
the guidance,
companies.
Shweta, is not really showing any offshoots as far as demand is concerned. We were expecting some demand, demand to pick up in the H2, which is the second half of this financial year, but reading between the lines from what the management is saying, I think there are some concerns still there, especially in regard to that rural demand. So unless that comes up, we shouldn't see any volume or a revenue uptick from FMCG pack. But on a profitability front, these companies are doing well. They have undertaken cost optimization efforts. raw material prices have eased, so margins and profitability has improved. Pretty much if you look at Q1, Q2 sees more or less a repeat of the same as far as FMCG go. Now, as you rightly said, Nifty FMCG corrected in today's trade. It was in the morning trade, it was up about 0.1 to 0.2% or so. By the end of trade, the index corrected and settled around 1.3% lower. Pharma pack was also under pressure. The Nifty Pharma pack settled 1.09% lower. Metal pack was also among losers today in the sectors.
Let's throw up that sectoral graph again, please. I'll request my producers to throw up that sectoral graph again today.
So Nifty Metal, Shweta, was also under pressure today. Nifty Metal corrected by about 1.33% in today's trade. Auto pack, which has been doing well in the last couple of weeks. In fact, it is the only sector which has been providing support in the face of this heightened volatility. Also saw correction amid a correction in the broader markets. The index was up 0.5%. By the end of the session, it was down about 0.7% or so.
The sharp correction in PSU banks as well, and this is a story we've been discussing for a while. PSU banks not doing too well, a lot of profit booking there. What's happening with PSU banks?
I mean the kind of run-up that we have seen in PSU banks, especially in the mid-cap PSU banks, some of them have turned multi-baggers with over the last 6 months or so. So I think there is a bit of a profit booking going on, especially since there are concerns about the net interest margins of these companies because of the higher cost of funds, since we of course are in a high interest rate regime. So I think that is going to create pressure on the margins. But all in all, I mean, like public sector banks, as far as earnings are concerned, now they're competing for loans with the private banks. Like, this is a new for us. Like, the public sector banks are doing as well as private banks and competing when it comes to loan growth.
Right. So it's a competition that is unfolding between public sector banks and private banks. But let's also quickly move on to results. The results season. We are in the end of the second week of results season. JSW Steels have just results for the Q2 have just been released. Let's quickly run our viewers through the numbers.
Certainly, Shweta. So net profit for the quarter came in at 2,777 crore.
Okay.
In the year ago period, there was a loss. That's why you don't see any change figure over there. The loss stood at about 915 crore. Revenue in Q2 FY24 stood at around 44,584 crore. A 6.7% improvement over the year ago period. EBITDA, Shweta, which is a proxy for the operating cash flows for the company, came in at around 7,886 versus around 1,752 crore in the year ago period. So very good jump in EBITDA. Margins also improved by around 1,350 basis points. So, like, I think the margins in the quarter gone by,
I haven't seen those margins in a very long time.
Yeah, I mean, since the numbers are just coming in, we'll wait on the guidance from the management to see what led to such a spike in margins. Now, overall, the results are healthy. The results are actually ahead of estimates.
And what do you make of these healthy results? What's happening here? Does it look like there's a lot of capex expenditure by the government, and that is likely to, that is in fact resulting in a lot of infrastructure development, a lot of steel consumption? What's happening here?
I mean, that is of course there, because of elections that are coming up. Government had, certainly enhanced its, capex cycle. As a result, a lot of these infrastructure related stocks did pretty well. JSW Steel, of course, being among them. Specifically talking about the results, I think, Shweta, they have done superbly when it comes to operational, operational activity from them. See the jump in margins, 1,350 basis point jump. From making loss of about 915 crores in the year ago period, now you're making a profit of about 2,777 crores. So not just, the demand and the capex has improved, companies also doing something right when it comes to operations for sure. I was talking about, JSW beating the street estimates. In fact, profit figure has come about 10% higher than what the street was expecting. Revenue has come about 4% higher than what the street was expecting. EBITDA is about 8.5% higher than what the street was expecting. and margins are also like about 100 basis points higher. So I think the street was factoring in such a big margin beat for JSW Steel.
All right, so those numbers there, a lot of green and double digit, triple digit have also beaten street expectations and estimates. Good numbers coming in there for JSW Steel. The stock was down about 1.39% in trade today. So perhaps these numbers and the repercussions of great, good, big numbers will only play up when the markets open once again.
That too, and there was a broader
Monday.
Correction in the metal
Of
pack
course.
as well, because of course we are seeing crude prices
So the impact on
spiking.
Right.
The demand has not really picked up globally, although China has reported a healthy set of numbers, but then again
All
like,
right.
the numbers are numbers.
Okay, the numbers are numbers, but all in all, good news there coming in for JSW Steel. We will have to wait and watch out for the stock impact early on Monday. But shifting focus now, as the war in Middle East turns hotter, gold seems to be getting more expensive. The price of 24-karat gold increased by 270 rupees to over 60,760 for 10 grams on Friday. The price of gold in the US also reached its highest in 3 months on Friday, setting it up for a second straight week of gains driven by heightened demand caused by the ongoing conflict in the Middle East. Prices of spot gold touched nearly $1985 per ounce after having reached its highest levels since 20th of July this year. As far as oil prices is concerned, that is also inching up, hovering around $92 to $93 a barrel. Both gold and oil becoming dearer with each passing day. Let's understand what's happening here. Kunal Shah, Head of Commodities Research, Nirmal Bang joining us on the show. Kunal, good to have you back, sir. Thank you for taking time out. Let's first understand what's happening with the gold prices. Gold prices inching to nearly $2,000 an ounce mark, becoming dearer with each passing day, reaffirming a popularly held belief that in times of uncertainty, you go to gold.
Yes, it's the fear premium which is basically caused the gold prices to shoot up the way it did. So the escalation in the geopolitical crisis in the Middle East is one of the reasons why gold prices have shot up. Apart from that, there are many reasons which makes a very strong case for gold to continue to do well going forward during next year also. And after we've seen the escalation in the crisis in Middle East, gold prices have shot up by almost $150. So it's quite a humongous rally as far as gold is concerned. And in spite of the rising yields, in spite of the stronger dollar, we have seen relentless buying taking place in gold, massive short covering on COMEX, that is the US exchange, and massive buying in the physical market ex-India. We've seen China gold premiums shooting up by $55-60. So if you are buying gold in the spot market in China, then $60 higher premium is basically quoted right now. In Turkey, the premium is as high as $90. So quite a time for gold, and it continues to do well, like you said.
All right, my colleague Suyash has very diligently drawn up a graph of how gold prices have been over the past couple of years. They've been important and very big black swan events, and very repeatedly so. COVID, the Russian-Ukraine war, and now the conflict in the Middle East. Prices have spiked up during each of these events.
I mean, as you rightly pointed out, Shweta, at a time of crisis, investors go to gold. And I mean, if you look at the charts, I mean, I won't take all the credit. Our producers helped greatly. They, drew out this wonderful chart for us where we have seen spike every time. Now, the first, the run-up that you are seeing is because of the COVID impact. Now, the cost of funds was lower. There was such uncertainty after the COVID crisis. So, we saw a sharp spike in spot gold prices, and in fact in August of 2020 gold touched a lifetime high of 20,075 levels. After that there was a bit of volatility and correction, but then the gold prices spiked again after Russia's invasion of Ukraine. Now I think Russia invaded Ukraine on February 24th 2023. Over the next couple of weeks, gold prices rallied about $100 to breach past that $2,000 mark and reach a high of around $2,070. Now coming back to the Israel-Hamas war conflict. Israel-Hamas conflict in the last couple started on about October 6th, right? Since then, we have seen about a $180 jump in gold prices, in the prices of spot gold. Now, this is week 2. In week 1, gold prices, the spot gold rallied by about 5%. In week 1, it rallied by about 5%, and in week 2, it has already rallied by about 3% or so. And if you see, we are just 15-17 points shy of that 2000 mark and about $90 shy of that all-time high level, Shweta.
All right, so just $90 shy of that all-time high level. And given, Kunal, if the uncertainty continues, which it's likely to continue, we are nearly on the second week of the war. It's been almost about 14 days since the war started. Are you of the view that prices of gold are only going to get more expensive from here on? Is there some correction that you see in the pipeline, perhaps?
See, the profit-taking correction will be the part of the bull run going forward. But we believe that this Middle East crisis have basically come to the fact that now the geopolitical landscape is worsening at a much faster pace than earlier thought. So each new regions are basically getting engaged in this. So earlier it was West versus Russia, China versus Taiwan, and now suddenly we have entire Middle East versus Israel, and so the strongest ally of Israel is. So it seems that some or the other way, naturally, we are seeing more and more countries are getting involved in the geopolitical conflict, and that is very supportive for gold. It flags uncertainty in the markets. And whenever the uncertainty or fear in the system, gold generally performs to do well. And that is what is happening this time. And this is not going to last soon as per my understanding. And I'm expecting, gold prices to remain quite buoyant going forward. And it is going to move up significantly in months to come.
Mr. Shah, we are just $90 away from that all-time high level, just about 4.5% shy. Do you expect us to breach those levels?
Yeah, eventually it will. So it's just a matter of time, maybe a month or two. It is bound to break those levels. So when I compare gold prices with the way central bank's balance sheet have been expanded over the last couple of years, except last 1 year, where the balance sheets have been shrinking, gold prices are highly undervalued. And even if without this last recent war, my base case scenario was that gold is likely to test $2,400 per an ounce in 2024. So I am very bullish, irrespective of this war has added more fuel to the fire, and the upside what we saw was quite abrupt. And the way things stand right now, so along with the Hamas, we've seen Lebanon getting involved, Syria, Yemen. So all these countries are getting involved, and this doesn't look nice. Even Iran to a certain extent, not directly, but Iran is also involved in this, getting involved in this matter. This is not looking good from a political point of view. And this is definitely not going to solve immediately until some miracle takes place. So very bullish.
Well, we all hope that the miracle does take place. Yes,
but that's a pretty, bold prediction coming from Mr. Kunal Shah. He expects gold to touch $2,400 by the next year. So I think
perhaps those who are waiting to buy should buy now.
They have to buy now. $400 upside. We have prediction coming from Mr. Shah. Mr. Shah, silver prices have also done pretty well. Between the two, which precious metal do you prefer?
So fundamentally, silver also looks very attractive. The silver deficit at the start of 2023 was somewhere at 220 million ounce. It's expected to widen to almost 300 million ounce this year by December. And the supply side continues to disappoint, whereas the demand side from the solar mainly been a major catalyst for silver. So next year, we are expecting a higher consumption. higher deficit. So fundamentals are pointing towards a very bullish scenario. Right now, because of the ongoing Chinese slowdown, where the metal prices continues to suffer, silver is underperformer. But it's just a matter of time. We are going to see any major spike in gold and silver shall follow. So
Okay.
silver also I'm very bullish and
Kunal, how does the
expecting.
robust numbers from China for the July to September quarter changes the future of commodities? And there is demand and it's likely picking up.
It's just green shoots, some of the very early signs that
Okay.
things are bottoming out. But as far as the robust growth is concerned, I don't see any signs of robust growth. So China's government doesn't have much of ammunition power right now. So I think they are allowing their economies to go down on its own weight, and
Uh-huh.
a gradual decline in the economy is something what we have been witnessing. So going forward, I'm not a great bull on China, and I think some bounce will
Do you
come,
not believe
but
those numbers, Kunal? Not too
no,
confident about those
no,
numbers?
I think it's just after it's like after a continuous drop in economic activity, we've seen some bit of pullback, but I would not give much importance towards this because the backbone of the Chinese market is real estate market, and real estate market in China, which accounts for the 25 to 28% of the GDP, continues to suffer.
Okay, let's also quickly move to crude. Crude also continues to be a major bummer for a lot of countries, especially like India, who are net importers of crude oil. At about over $93 a barrel, touching that crucial 95, could touch that crucial $95 a barrel mark in days to come. How comfortable are you with these numbers? How long can India sustain these numbers before having to, move quickly and swiftly to do something about it?
Well, it's a perfect storm for oil because on one hand, when OPEC production continues to drop, it's more than a decade where we've not seen any revival in production by OPEC. OPEC production deliberately or it's a planned outage, but it has been continuously going down. So that is not a good news. Second, the non-OPEC production from the US was the major catalyst for the oil market. But it seems that the shale oil production in US seems to have peaked out, and from here we don't see upside in that numbers. Recently, US is lifting up sanctions on Venezuela to release the more oil supply, but it will take time and not more than maximum a million barrel, not more than that. So oil market is pretty tight, and any escalation from here in the geopolitics, that Strait of Hormuz getting close, something like that, and oil will flare up. So my conservative target
Okay.
for the Brent is $100. I don't
On
want
the
to, but
Venezuelan
it
oil,
will.
Kunal, with additional supply of Venezuelan oil, do you think there could be some easing of pressure on oil prices?
And also Saudi has
No,
said that it will stabilize price and disruptions in the weeks to come. So do you expect any more cuts going forward from Saudi?
To just balance out the additional supply from Venezuela?
no, I don't think so. Because OPEC Plus have already done too much. Until and unless prices drop significantly, they will not initiate a new production cut. Venezuela, I don't think so. It's a major problem. It accounts for almost the current production is 0.8 million barrels in a 102 million barrel market. And with the lifting off of sanctions, another 0.5 to 0.8 million barrels of oil can flow in next 6 months, because it's not like you start a tap of water and it starts flowing. It takes time to restart the excess capacity, what idle capacity which you have been having. So Venezuela is not a major news as for us, and the OPEC Plus stance is not going to change immediately. So still continue to remain bullish on oil, and my big case is that US oil production is going to drop going forward because a lot of basins are running, showing signs of exhaustion. So oil looks quite bullish right now.
Okay. We had Vijay Bambani on the show yesterday, Kunal, and he said something very interesting. He said, no matter how many times you cut production, as long as there is no demand, there is no consumption, you cannot really stabilize prices of oil. Do you concur with that viewpoint, or do you
No,
believe it's now
I
about
don't.
time that the prices may just go up?
No, it's not about that. It's not about demand anymore. Demand continues to remain. So oil demand is at 102 million barrels. So we've already breached pre-COVID levels. And this is a myth, that the oil demand is collapsing. Emerging market, I mean, even with the emergence of electronic vehicle, 70% of the car sales comes from the developing markets. So it's a time, developing markets are going to take 5 to 8 years to transit from normal traditional cars to the electronic vehicles. So, I mean, people are still about to get their first car in our country. So, I think it's quite a time and too optimistic to say, people things are looking bad from the demand side. The demand side is quite robust, and India is going to make a big mark in oil demand. So, do not underestimate demand. Demand side will do well. It's the supply side which is causing the major problem in oil market.
Now, Mr. Shah, India is a net importer of oil, as we know. At what level will you start feeling uncomfortable in context for domestic economy?
Well, we are already at uncomfortable levels. Any level above 95 or near 90, 95, and another spike of $10, will be in a very uncomfortable situation. So we've seen a statement coming when oil tested $94 a fortnight back. Our oil minister made a statement regarding oil, and I think anything above 95 and we are not in a comfort zone. So I just keep my fingers crossed that it doesn't go above that.
All right, and before we let you go, Kunal, I think an important question to every person's mind right now as a consumer watching out. You said anything over 90, hovering around 95 would perhaps be a cause of worry. Does that mean in the near future oil perhaps could get more expensive? We know current account deficit. We know country is going to take a hit on current account deficit. But to what extent can OMCs and the government take a hit if oil prices continue to soar?
Especially since government has essentially put a price freeze on fuel prices. I mean, since May of 2022, we have not really seen, petrol and diesel prices rise. So a lot of pressure on OMCs, no?
As far as the government is concerned, yeah, there will be a lot of pressure on government and also on OMCs. And I'm expecting, the fundamental of oil indicating towards further upside, and any escalation towards Strait of Hormuz, where a lot of oil supply generally pass through, I think that's going to cause major havoc. So let's pray it doesn't happen, and let's hope that something will come up which will bring down the oil prices, but the fundamentals are definitely not indicating towards that.
All right, Kunal, thank you very much, sir, for joining us here on Newsline. Good to have you back. Hopefully to get you back very, very soon if prices continue to remain stable, and we hope so too. Shifting focus now to some of the stocks that we continue to track on this bulletin. Adani Cement has announced a successful completion of its refinancing program for acquisition of debt taken for Ambuja and ACC through a $3.5 billion financing package raised from a clutch of international banks. The transaction was financed by 10 international banks that included DBS Bank, First Abu Dhabi Bank, Barclays PLC, Paribas, Deutsche Bank, Standard Chartered Bank, among others. Now, Adani Cement is the second largest cement player in India with $6.6 billion acquisition of Ambuja Cement and ACC, the largest acquisition in the infra and material space that concluded in September of 2022. Adani stocks continue to be in focus and all of them were in red today.
Yes, Shweta, all of them were trading under pressure, and the two stocks whose debt is being refinanced, the group's purchase debt, were Ambuja Cements and ACC. Now, interestingly, Ambuja Cements was seeing some sort of a recovery because, at the end of the day, Adani is going to save about $300 million from this refinancing. Now, the general expectation, market expectation would be we are in a high interest rate regime. So, if you're refinancing, you're probably doing it at a higher cost of funds. But no, that's not the case. Adani Group is actually going to save $300 million or so from this refinancing exercise. So we were expecting a slight uptick in the stock prices. However, the stock prices have corrected. In Ambuja's case, we were seeing some bit of an uptick. It was hovering around 1% lower, but by the end of the session, the stock was down about 1.7%. In ACC's case, Shweta, the stock was before the news broke out, I think around 230 or between 230 and 245, the stock was down about 2% or so. After the news, it crashed sharply and it was ended down about 3.32% lower or so.
That's very, very strange. Let's quickly get in our expert Amit Gupta joining us on the show. Amit, what's happening here? The stock should have reacted positively on the back of refinancing news. Adani Group is going to save approximately $300 million. But for some reason, all Adani stocks ended in red.
Yeah, hi, Shweta and Suyesh. No, I think that would have been probably a little bit of a collateral damage of the overall market sentiment. The news is, in fact, positive. The refinancing news, as Suyesh was also pointing out, there will be a saving of about $300 million into this, and that sort of also removes any doubts about the deleveraging of Adani Cement, because they have laid out a 3-year plan to deleverage Adani Cements by bringing down the debt over a period of time by increasing the capacity to 130 million ton, and then eventually paying off that debt. So I think it's a positive sentiment from Adani stock point of view, or Adani group of stocks. Also, especially since the transaction is not financed just by 1 or 2 banks, but actually 10 international banks, which acted as a lead manager and book runners to underwrite this transaction. So my sense is that it's a positive step over a medium to long term point of view. The short term, maybe the market sentiment took over.
Now, Amit, what stocks can see a rally from here on? Like with this news, Adani Enterprises, Ambuja, ACC perhaps?
Yeah, I mean, the cement pack looks good, given that this is an election year of time, and a lot of capex is happening in the form of infrastructure, whether it's roads or railways. So the whole cement pack, the ACC and Ambuja, and along with that, they have Adani Group has recently made a new acquisition in Sanghi Industries as well in August this year, and the open offer was completed last Friday. It's a small capacity, 6.6 million ton, and I think 6 million ton is the clinker capacity. But it's at a very strategic location in Gujarat, where they can use the Adani ports to actually transport this cement from this plant. So I think they are making good moves into the cement. They are strategically looking to either acquire or do some sort of a merger to make sure that the capacity increases. They've already given a target of about 130 million. So basically, they're doubling their capacity from the current capacity in over 5 years, and I think that is something which can be analyzed, and investment positions can be made. So I am positive on their cement pack, both ACC and Ambuja and Sanghi Industries. Okay. Even Adani Enterprise, I would say it has become sort of a cash cow now for them, given how fast it is moving. Given that they have sort of deleveraged a little bit since the Hindenburg report. I think the next 6 months are still very critical from overhang of this political issues. But once we are through with that, then Adani Enterprises looks very good for the next 5 years.
All right. Amit, some show of confidence as well, right, on Adani Group? Come to think of it, 10 international banks participating in refinancing a debt of $3.5 billion. The who's who of banking system
are still backing the company.
Absolutely. So it looks like, there's still faith and trust in Adani Group of companies. And a lot of it, come to think of it.
Yeah, right. Not just from international point of view, even from domestic, there have been reports of at least two companies in the last a month or so that they are looking for Adani to take over. Whether I think one of them was Orient Cement and another was Heidelberg Cement. So I think there is some sort of a confidence which is coming back into the group companies. Uh, uh, I mean, it has also been helped with the fact that they have been able to deleverage some sort of it, whether it is selling stakes to external investors, whether there have been GCC funds who have invested into the company. So overall, I think the confidence is slightly better. The SEBI has also given them a sort of a clean sheet. I know that a couple of points are still pending on that SEBI report. But it looks like that they are going to get a clean sheet from the SEBI as well. And they have made changes in the structural shareholding structure also as
Okay.
per the new SEBI recommendations. So my sense is this is a slow process of getting the confidence, investor confidence back, and probably we'll see this confidence taking a sort of a going to the next level
Right.
probably after the elections.
All right. So Adani Group, they're refinancing one of the biggest loans, biggest refinance program in Asia at $3.5 billion. But we're going to leave it at that. Let's also move to another stock that we're tracking, that is Zomato. SoftBank is likely to have sold a 1.09% equity in Zomato in a bulk deal worth 1,000 crore rupees on Friday. Today, shares of the company were trading at approximately 1.5% higher today. Now, SoftBank, remember, owed 2.17% stake in the company at the end of September quarter. It had offloaded about 1.17% stake in Zomato via a block deal. Now, this is the latest selling of stock. What are you making of these developments? Zomato stock also, come to think of it, reacting positively on the back of that deal, Amit. Zomato, offloading, or rather SoftBank offloading its stake in Zomato.
I think the selling of the stake by SoftBank is not the first instance. I think few months ago also they sold a stake in Zomato, I think around 80-85 rupees. So I think all these private equity or VC funds, they have sort of a mandate of anywhere between three years to 7 years, and eventually whatever is the performance of that particular investment, they need to make a exit, or at least make a partial exit. So I think we are seeing that happening in the stock. The good thing is that there is a lot of domestic investors who are lining up for this, whether it is mutual funds or PMSs. So a lot of these selling is getting absorbed by these domestic institutions. The visibility of the business has also increased a little bit. Obviously, it's a great time for them, given how the ICC Cricket World Cup is happening and the festive season is there. Also, the revenue which they are generating is going to be far more, and that will propel better growth rates over the next 3 to 6 months. So my sense is that since the business is improving, a lot of domestic investors would lap up this external selling and give exits to these Ps and VCs. Having
Now,
said that, I still think that the path to profitability is at least 18 to 24 months away.
Now, talking about profitability, I think operationally Zomato is still loss making, but on the books in Q1 I think it turned profitable. Now, I mean, Amit, the kind of returns that we have seen from the stock, I think it's up about 82% in a 12-month period. In 6 months, it's actually turned into a multi-bagger. So this pairing off of stake from SoftBank, do you see it as a profit booking activity?
So, I won't loosely use the term multi-bagger, because there are a lot of people who have bought it from 120 to 160 also. And they have been stuck into the stock for a long period of time, and that includes retail investors, that includes domestic investors as well. A lot of mutual funds have bought it before the crash happened in late 2021. So my sense is, I mean, that's a multi-bagger is a very loose term to use. I mean, it clearly depends how you have handled that position, whether you have actually bought it at 40 or you have averaged at 40 or have actually done nothing at 40.
Okay.
My sense is that, obviously there was some sort of indication that they are not going to do a lot of acquisitions. Their Blinkit acquisition is actually still loss-making. It has, I think, posted about 1,100 crores loss in the last quarter as well. And that's a competitive space because you're, dealing with uh, uh, Tata's Big Basket, you're dealing with Swiggy's Instamart as well. So that's a competitive space, and I don't think that's going to be profitable at least in the next 1.5 to 2 years. So that can sort of dominate the sentiment in Zomato. Obviously, the good thing which has happened is that it has virtually become a duopoly. In this industry, it has become a duopoly. Only Zomato and Swiggy's are there. They've done a lot of optimized delivery strategies, a lot of advertising, promotional expenses, which has sort of drive the improvement in the unit economics. And that's why the market has rewarded with them with this 70-80% rally over the last 6 months or so.
Now, Amit, I mean, like that's a view obviously on Zomato, but the story today in markets was also that how private banks performed. Actually, the market entirely was muted. We saw, a correction of about 0.4% or so, whereas Kotak Mahindra, like all the heavyweight private banks like Kotak Mahindra, IndusInd, SDFC posted strong gains of about 0.5% to 1.5%. What led to this outperformance?
It could be, just a play ahead of the earnings result. I think there are a couple of private banks which are declaring results over the weekend. Plus, I think there is some sort of expectations that IndusInd Bank will be included in MSCI index. The review is due on 15th of November. So I think that stock is seeing some sort of a rally. Also, because now the earnings are out for IndusInd Bank, they've got an RBI approval of promoters have got an RBI approval of increasing their weightage from about 15% to 26%. So they have to actually buy 10% from the market. So that is leading to a sort of positive sentiment in the case of IndusInd Bank.
Right.
Other private banks, in the bank Nifty is also, sort of pulled a decent result, whether it is Federal or Karur Vysya, etc. So my sense is it's more of a reaction towards the earnings which are coming rather than anything exceptional happening in private banks as compared to PSU banks.
All right, Amit, thank you very much, sir, for taking time out for joining us here on News 9. Good to have you back. And moving on, Elon Musk's fortune slumped by $16 billion on Thursday after Tesla's weak third quarter earnings weighed in on share prices. Now, Musk, who is the richest person on the planet with a fortune of $209.6 billion, owes 13% shares of Tesla and derives the majority of his wealth from the auto company. Tesla's share fell by 9.3% after it missed both earnings as well as sales expectation for the quarter. Watch this Reuters report to find out more.
Shares of Tesla and other electric vehicle makers plummeted on Thursday, a day after Tesla CEO Elon Musk warned that high interest rates could sap consumer demand. The world's most valuable automaker sank more than 9% and was set to lose about $70 billion in market value. On a post-earnings call Wednesday, Musk said he wanted more clarity on the economy before ramping up a planned Tesla factory in Mexico. His concerns? High borrowing costs that could deter consumers and, quote, paycheck-to-paycheck pressures on American workers. The comments marked a change in tone from Musk, who last year said his company was, quote, recession resilient. The EV maker missed quarterly revenue estimates by the most in more than 3 years, despite hefty price cuts. Tesla is not the only EV maker worried about demand. General Motors this week said it would delay production by a year of its Chevrolet Silverado and GMC Sierra electric pickup trucks at a plant in Michigan. Ford last week said it would temporarily cut one of 3 shifts at a plant that builds its F-150 Lightning pickup trucks. The automaker in July already slowed its EV ramp-up, shifting investment to commercial vehicles and hybrids. And EV startup Lucid reported a near 30% plunge in third-quarter production this week, while Amazon-backed Rivian, which makes electric pickup trucks and SUVs, also disappointed investors this month when it shied away from raising its full-year production forecast. Shares of Lucid and Rivian were down roughly 3% and 4% respectively in Thursday afternoon trading.